Welcome back. You're with us here on Markets Today. We are running you through what mattered during the course of the day today through 5 stories. We got through 2 of the top headlines. Let's go across to the third one. 8 more stocks will enter the NSE futures and options segment in October. All these stocks were in quite a bit of action. My colleague Nigel is here with the details. Nigel.
Well, that's right. 8 new stocks will be entering the F&O market from the end of the September series or from the start of the October series. They'll be eligible for trading, and some of those stocks did very, very well in today's trading session. Oberoi Realty, it has a tailwind about the sector on the whole, but that stock was flying away. Abbott, it's a 20,000 rupee stock, but that one as well did spike in today's trading session. And Crompton, Greaves, consumer electricals, that stock as well was higher. From the cement names, you had India Cement and JK Cement. Both of them will join the F&O list. So both those 2 stocks did well. And Delta Corp, it came out from the high point of the day, but it ended in the green. A couple of underperformers, though, were Dalmia Bharat as well as Persistent Systems. But those 2 stocks as well will be part of that list of 8 that's going to be included in the F&O. Keep in mind that from the September series itself, you had 10 stocks that joined the F&O list. So in 2 months, nearly around 18 stocks enters the F&O list. And in this year so far, that's 2021, you have 43 stocks that have joined the F&O list. So as they say, Khelo India Khelo, that seems to be the theme that's playing out. And all these stocks did pretty well.
And India is playing and rejoicing. Thanks, Nigel, for that. Let's move on then to the 4th headline of the day. Metal stocks slipped in trade with the index down 1.5%. Jindal Steel and Power as well as JSW Steel saw cuts of over 1.5% each. However, they told CNBC TV 18 in an interview that demand remains robust, but supply bottlenecks are a challenge. Nigel joins us. He's still with us, and he's going to take us through with the key takeaways from the commentary of the management. Nigel.
Well, that's right. We had a couple of steel majors that joined us today, and JSPL, well, they in fact said that flat product demand is fairly strong, but long product demand is a little bit subdued. They also said that blended realizations are down by close to around 1,000 rupees per ton in comparison to June's prices. However, they go on to state that in terms of a guidance for FY22, they're sticking to 8.25 million tons, so they could even exceed that, while the EBITDA per ton should come in at around 22,000 rupees per ton. They added that by the end of this calendar year, the power sale asset, well, that will happen in this calendar year itself. That's 2021. JSW Steel, well, they as well said that yes, demand is sluggish and slower than expected. But if you just compare July 1st and today's price, well, it's more or less flattish. So there has been volatility in the middle, but otherwise the prices are more or less flattish. They also said that they're negotiating with some of those auto majors whether or not they can push through a 5 to around 10% price hike. But they're also expecting NMDC to cut prices from year on. They highlight the fact that coking coal costs have gone up, so that'll be a bit of a dampener. The cooling off of iron ore prices is a positive. They have finally said that the international operations delivered a good quarter and it'll improve from now on. In fact, let's listen in to what the management's had to tell us.
Demand is slowly, gradually recovering, and particularly from the manufacturing and exports. They're the 2 drivers which we are seeing where steel is getting exported not only directly, indirectly through auto components and engineering goods. Those exports are also causing incremental steel demand in India. Point to point, that means 1st of July to 1st of September. If you ask me whether prices got corrected, I don't think so. Prices more or less remain at the same level as the 1st of July. But 1st of July to 1st of September, there is a volatility. Prices have fallen by 4-5%, and again it recovered. So the steel prices in the retail market are much higher compared to what auto sector was paying in this quarter. So the steel industry requested for increase. So negotiations are on. I think it will get resolved in the next few days. Long products and flat products, if it's the auto sector, I think it ranges from 5 to 10%. That is the range.
The pricing front, I would like to comment that flat product prices are still very strong. But yes, you are right, with the monsoon season, the long products, especially the rebars or say TMT, these pressures are under, the prices are under pressure. We will be crossing 8.25 million ton, hopefully, and this is what we are in line. Net realization loss of 1,000 rupees per ton over the month of June.
Well, that is JSW Steel and JSPL. Meanwhile, Vedanta has been in focus over the last 2 days. The much anticipated board meet today. The stock was, of course, not doing very much. It was slightly lower, but the announcement of the dividend came post-market hours. Let's go back to Nigel for more on this. Nigel.
Well, that's right. Just post-market hours, Vedanta went ahead and declared a dividend of close to around 18 rupees 50 paise odd. Now, with this 18 rupees 50 paise, they have passed on the entire dividend that they've received from Hindustan Zinc to its shareholders. Keep in mind that last year, they had passed on close to 9.5 rupees. So this 18.5 rupees plus 9.5 rupees, that comes to around 28 rupees odd. So the street was bracing that all this dividend will be passed on, and that's precisely what's happened. In fact, the market expected that. They were factoring in an extraordinary dividend. That's more than 5% of the current market price, and that's precisely what's happened. That's why you didn't see any adjustment in the futures market. So par for the course, read positively for Vedanta shareholders.
Thank you very much for that. Moving on then to the fifth headline of the day. AU Small Finance Bank gained after the company said that yes, Sumit Dheer, the head of internal audit at Jaipur, has resigned, but the bank continues to remain in discussion with him for a possible retention. This was, of course, in a conference call which was conducted early on in the morning. Abhishek is here with the details. Abhishek.
There was a con call today pre-open, around 8:30 a.m. So Alok, what they mentioned over there was that Alok joined in April 2021 to replace Mayank as the CRO. He came from Mumbai with an assurance that the family will shift from Mumbai. However, due to COVID-2 impacted the circumstances, and hence he was moving back to Mumbai, and therefore he had resigned. Sumit's family also faced great stress with respect to the COVID second wave, and Sumit did ask for relocation to Delhi, but due to the job profile that Sumit had, AU Small Finance Bank could not relocate him to Delhi. So they had mentioned that, management provides a very good and sound connect between board members and the team members. Both these functions, that is the CRO as well as the Chief Audit Officer, that role requires the person to be in Jaipur, and hence they cannot move people out of Jaipur. Therefore, they did mention that they want to reassure that bank continues to do well. They did give a highlight that July and August have been pretty good in terms of collections as well as the asset quality front. They remain in absolute compliance with respect to the fact that all notices will be given to the exchanges. Back to you.
Abhishek, thank you very much for that. Big cut yesterday, about a 2% recovery today. Let's stick with the financial services space. HDFC Bank is set for a management change. Banking sources tell us that their wholesale credit risk head is set to join Bank of Baroda. Ritu's here with more on this. Ritu.
Public sector banks are looking to strengthen their risk management functions and make lateral hires, especially with the government also nudging them in this direction. So we've been given to understand that the head of HDFC Bank's wholesale credit risk is set to join Bank of Baroda as its new chief risk officer. So Anant Raman S., the joint head wholesale credit risk at HDFC Bank, will be joining as Bank of Baroda's new CRO on a contractual basis, is what we've been given to understand. Now, he has been with HDFC Bank since April of last year after a 2-year stint at L&T Finance as its group CRO, prior to which he was at HDFC Bank between 2006 and 2017. And this is a very positive development from a Bank of Baroda point of view, because risk management is a very important area for banks, especially given the current environment. And if you recall, it was only in 2019 that the government had allowed public sector bank boards to appoint CROs from the market and pay them market-linked compensation to be able to attract good talent. And we've been seeing a trend in this direction, not just with Bank of Baroda, but also others like SBI and Punjab National Bank making lateral hires to strengthen their management functions.
Ritu, thank you very much for that. Let's move on then to the primary market action. Ami Organics, a specialty chemicals company, has opened up for subscription today. Sonal is here with the details on this particular issue. Sonal.
Another specialty chemicals company which is coming up with an IPO, it's Ami Organics, and the IPO opens today with a fresh issue of 200 crore rupees and an offer for sale for 370 crore rupees. The price band is between 603 to 610 rupees per share, and the company has already made pre-IPO placement to PE investments amounting to 101 crore rupees. Now the proceeds will be used for certain financial facilities and funding working capital of the company as well. Company caters to development and manufacturing of pharma intermediates for regulated and generic specific APIs and new chemical entities, and also key starting materials for agrochemicals and fine chemicals. And exports, they contribute around 52% of the total revenues. Now let's take a look at the financials. We'll see that in FY19 and FY20, the performance was quite flatter if we look at the revenue, EBITDA and profitability. However, there is a big jump in FY21, and that is because the company recently acquired 2 manufacturing facilities from Gujarat Organics for a total consideration of 93 crore rupees. The company also plans to undertake some more expansion, and if we look at the valuations, it is decently priced if we compare it with the sector average. So it is trading at 42 times, which is at par with what the sector valuations look like, slightly lower than the other bigger players as well. So this is something we'll be watching out for.
Thank you very much, Sonal. That's a 570 crore IPO which opened today. With that, we're running out of time in this edition of Markets Today. Thank you for watching.